Hey, financial warriors, I'm Alex. We need to bring you an urgent update today. Retail giant Target's stock price has recently tumbled to around $85, pushing dangerously close to its 52-week low. This makes TGT look incredibly cheap on paper, but cheap doesn't mean it can't get cheaper. Today, we're not just dissecting the headwinds. We're giving you explicit support levels, resistance points, and long-term price targets to help you decide, is this a buying opportunity or a falling knife? First, a quick recap of why TGT is facing these headwinds. Macro pressure crushes high-margin business. High inflation and interest rates are forcing consumers to cut back, shifting their spending from TGT's high-margin non-essentials to lower-margin essentials. This causes TGT's revenue growth to stall while simultaneously squeezing its profit margins. Internal uncertainty. Aggressive promotions to clear inventory, coupled with an impending CEO transition, have led to market concern. This concern suggests the company lacks aggressive turnaround strategies, thus keeping the stock under pressure. But here's the TGT contradiction. Despite short-term headwinds, it remains a dividend king with over 30 consecutive years of dividend hikes. It also boasts a low PE ratio of around 10 and a strong ROE near 30%. From a long-term value perspective, it is significantly undervalued. So when can we expect a turnaround? The answer is the holiday season. Q4 is the key catalyst. The holiday quarter is TGT's season of highest revenue and profit. If TGT can successfully drive high-margin gift sales and demonstrate effective cost control under the new leadership, this will be the best catalyst for a stock rebound. Technical trading plan. With the stock currently in a prolonged downtrend, strict technical analysis is crucial. Our crucial support zone, a strong buy area, is between $85 and $83. The primary resistance zone for short-term take profit is between $95 and $100. Looking at the chart isn't enough. We need to know who is buying and selling, the smart money. TGT has a high institutional ownership of around 86%. While some hedge funds sold off, major long-term asset managers like Vanguard have been increasing their TGT position at these depressed prices. This confirms that serious long-term value buyers are stepping in at the $90 level. Despite the smart money buying, TGT's short interest remains active. This implies that any attempts by the stock to rally will likely face immediate selling pressure from short sellers. This dynamic reinforces our decision to set $95 to $100 as the near-term resistance. In summary, the market sentiment shows a tug-of-war between long-term bullish conviction and short-term bearish suppression. This validates our strategy of buying the dip gradually. Finally, let's look at the Wall Street consensus and our own long-term targets. TGT currently holds a hold consensus rating, but the 12-month average price target is clustered between $101 and $111 USD. This suggests that even with conservative estimates, TGT has a potential upside of 18% to 30% over the next year. Our long-term investment advice is to scale in gradually. Seize the opportunity in the $85 support zone. Only commit a fraction of your planned position at this low price. For a long-term conservative target, if TGT successfully navigates its transition and stabilizes margins, we set $110 USD as a reasonable long-term goal for value recovery. Finally, an exit signal. If the stock falls below $83 USD, it signals a severe breakdown in the trend and requires a stop loss or reassessment. In conclusion, TGT is currently a forgotten value diamond, but mining it requires patience. If you believe in its dividend and long-term value, follow the map and invest wisely. That's it for today's analysis. Do you think TGT will bounce back this holiday season? Let me know in the comments. If you like this video, please remember to like, share, and subscribe to my channel. See you next time.